Now, we've often told you that private consumption makes up more than 50% of Australia's economy. In other words, happy consumers, happy economy. Well, today, not so happy though. The Westpac Melbourne Institute Consumer Sentiment Index fell 3.5% in September. And to be honest, it seems as though it was all about the uncertainty about the future of interest rates. Matthew Hassan is a senior economist with Westpac and responsible for this survey and joins me now. Matthew, do you think that was it? It seems as though they were on a bit of a roll, seemed to be spending more, going okay, then suddenly they hit a wall in September.
Yeah, absolutely. A couple of months now we've seen back-to-back declines, down 6.5%. It almost feels like we had a mini sugar hit when rate cuts came through, and we've sort of given back those gains. We're back where we were 6 months ago, actually back where we were at the start of the year. It's definitely a softer tone that's coming through, and I think we have sort of warned that some of these better-looking figures around consumer spending were being flattered by one-off effects. I suspect the consumer sentiment stories bring us back down to ground a little bit, that the recovery is still a little bit shaky. And the detail of the survey definitely highlighted that interest rate expectations were at the core of this. The survey was in the field during the week of the RBA's September policy decision, and amongst those surveyed prior to the decision announcement, sentiment was considerably weaker. In fact, when asked specifically about expectations for mortgage interest rates, just over half of that subgroup expected rates to be higher in 12 months' time, which is extraordinary compared to the readings we've had over the last couple of months where it's been the other way around, with maybe 60% plus expecting rates to move lower. Now, those doubts sort of came back a bit after the RBA decision, calmed down a little bit, but that seemed to be the framing of the October survey. Seems to be why we've given up some ground, that's much less clear-cut that we're going to see further easing from the RBA. That's, in turn, seen consumers pare back their expectations for finances over the next 12 months, down 10% compared to last month. That was previously an optimistic outlook. Now it's around about neutral. So some of the gloss seems to be coming off the policy supports that have been deployed over the last 3 to 6 months. Sentiment has sort of landed back where we started with, and I think it's a bit of a warning that the consumer recovery, while it's definitely coming through, is perhaps still a little bit shaky around the edges.
And what's your own sense, Westpac? Because, I mean, when you saw the Reserve Bank last week expressing its own caution about where rates would go in the future, and then previously you'd seen the monthly inflation number come in higher than expected, that was off the back, presumably, of this anticipated spending. What's your own sense about where interest rates go into the future then?
So we think the next moves in rates will continue to be lower. The timing is obviously a bit more open. The RBA's commentary, I think, leaves all options open on the table going into November. They're not prejudging. The government's clearly not prejudging that decision. Talked about the previous forecasts being on the basis of further slight easing in policy. So I think that was sort of their base case, is that policy would move slightly lower, but highlighting that the inflation and spending updates would be closely watched. As I sort of mentioned earlier, that there are some one-off factors at play around the consumer spending numbers. The big 0.9% quarter that we had in the June quarter was definitely flattered. We're not tracking a 3.5% to 4% growth economy for the consumer. But we have seen some improvement. And so judging the difference between the signal and the noise is important to that aspect. And, of course, around inflation, we have had two more worrying monthly CPI indicator updates. And the September quarter update is for the quarterly CPI is going to be absolutely crucial for the lead into the November policy decision meeting.
Yes.
On balance, we think November is still live, and that that the data will support the case for an easing, but it's 50-50 at this stage. And I think if the RBA was meeting today, they'd be on hold.
OK, so then one other thing about this is you talk about the expectations about rates and about mortgages and all that sort of stuff. Strangely enough, I'd be a bit more concerned about the jobs market if I was a consumer right now, just wondering whether everybody's going to hang on to their jobs. Now, if you felt pretty secure in your job, you'd be OK one way or the other. Maybe you'd be more concerned about the rates at that point. But I would think there's a subset of Australia's economy. We're talking about Mount Isa, 600 jobs there. We're hearing jobs being lost in banks. What's your own sense of that?
Well, there may be these subgroups and segments where job loss concerns are more pronounced, but across the wider economy, it's just not an issue at the moment. In fact, if anything, confidence around jobs improved slightly in the month of October. It's basically around about average. Unemployment expectations index, we asked consumers where they expect unemployment to go over the next 12 months, is around about its long-run average. That's consistent with a stable labour market rather than one that's tightening or growing above trend. But it's telling us that there's not this fear of job loss that, as you say, would be more concerning. If we had a drop in sentiment coupled with a sharp spike in job loss fears, that's a recipe for a more abrupt slowing in consumer spending, particularly on those big ticket items, the more expensive durables and expensive renovations and travel items in particular. So we're not seeing that picture, but what we are seeing is a loss of momentum and giving back some of the gains from previous months.
I'll tell you what, always good to have in the program. Matthew Hassan, Senior Economist at Westpac there.